In this video, we are going to cover another example for nested fractal sequences. That is, using a lower time frame nested sequence, we will drill down our our common sequence, the one that we use for our trading, in our trading plan. We will drill it down to one time frame lower or even two time frames lower to try and do counter trend trading. This is a really great practice to do, and this is the way we should be thinking to use in order to take counter trend trades that go against your main sequence. In my case, as you know, let's take a look at the gold here. Gold. In my case, I am using the monthly, as you know. Let's use the L key for a label. I'm using monthly, weekly, and daily sequence. Okay, I'm using that one. So that means that the monthly is going to tell me what I will have to do. So if month is down, then I have to take shorts on my anti-time frame, which is the daily. So once any of this, if any of this one is taken out, is not taken out, sorry, is out of alignment, then I will be able to go. This is the main sequence. I'm gonna label here my main sequence, or let's say master sequence. Okay, this is the master sequence that I'm using. I'm gonna make it like 35. Okay, the one I'm using for my trading. So the monthly will tell me the direction and even the weekly. So here, as you can see, we connect the latest two peaks, okay, on the monthly. We've got this monthly area of demand in control after a strong drop in price, okay, and we've got a monthly downtrend, so we have to short. Okay, on the weekly, this is what we have. We've got here that now, after a rally in price, okay, we've got now an ascending trend line here with these two valleys and rally-based rally and all that, and we've got a weekly area of supply here. Okay, we've got monthly area of demand in control. This monthly area is not a monthly area. Okay, why? Because it didn't take out opposing area, so this is not the monthly. The only monthly area here, let's use, this is a monthly area of demand here. We place a horizontal line there, was taken out by this one. And price is now right there, testing it for the second time. Okay, so here is what we have. Monthly downtrend, and now at the end of the month will be out of alignment. But well, we have to short, but we don't have an area to set and forget until here. And this one is already tested, so we can't set and forget. So if we cannot set and forget on areas above in our sequence, okay, and the monthly is clearly down, then we have to wait for confirmation. Okay, so once an area of demand is gains control and it's not breaking, normally it travels to the opposing area of supply, which is up there. There are several areas in the lower time frames in the weekly and all that serve as opposing areas for calculating a curve on lower time frames, and opposing levels need to be removed weekly in order to continue rallying. But on the way up to those areas, we can go counter trend long, okay, using the nested sequence. So our master sequence is monthly, weekly, daily. So we switch to the weekly, okay, and by the time we get here, we are here, okay, we've got this area of demand here in control, a little bit lower, smaller. So hit was tested here, and now we've got a second retest, big representation expected, a monthly area of demand in control. So weekly area running control, monthly area running control, and a lot of room from here to here. And this is one of the things that we need on the counter trend for taking counter trend area longs. As you know on the lesson, it says that we need to have compression here to the left or nothing at all. So we have free room to rally. Moreover, if we have a higher time frame area of demand in control, which is a monthly, even better, okay, because that will help price to push higher into the opposing zone. Okay, so we've got nothing here and a lot of profit potential. So now we drill it down to another sequence, a lower time frame sequence. Now we have to read also price action. We've got bullish engulfing pattern, okay, and another bullish engulfing pattern, two bullish engulfing pattern accumulating, okay, at the bottom here within a monthly area of demand. Okay, so here we've got the weekly still, okay, in alignment there, right there. It's still in alignment. So downtrend, we are expecting to take a short here. Okay, but we've got a higher time frame area of demand here. So if we've got levels of supply here on the daily to take a short, we are allowed to take it because the monthly opposing area is tested. But if we don't have, we have to wait for confirmation. Else, a breakout trading could happen on the way up once the weekly is out of alignment, which is right here. Okay, once this is taken out, and then we will have an ascending trend line here once that happens. Okay, so since we have a weekly area of demand in control, monthly area of running control here, we've got two bullish engulfing pattern and all that. Now the weekly is still down. We can use, okay, an sequence here. Let me do this. Let me clone it with Control key here and then drag it. We can start using. We could start using the weekly, not yet, daily H4, and then I clone it again. We drill it down to the daily H4, H1. Okay, so here for intraday traders, once this is out, we've got a lot of room to here. Okay, so we can start using a lower time frame sequence in order to trade. If this is allowed in trading plan, drilling it down to as low as the H1. Okay, that's what we have. So let's see on the daily now. We've got down here. All this is the weekly and monthly area of demand. Okay, so on the daily, this is what we have. That one. Okay, we've got a while long, but this is just too risky because it hasn't taken out anything. Okay, so I will be waiting for, should be waiting for something like that. Okay, see all this to be out all the way with a rubber room to here or more. So we were mentioning about these areas here that this is not a good base, so set and forget cannot be placed here. And look what happened, it was not respected. So here you can say now that the daily is with me. Right here we've got an uptrend on the daily. Then we can switch to the master sequence for intraday, daily, 4-hour, and daily, and we can start taking those areas, okay, on the daily and 4-hour and 1 hour. Once this is out, okay, this area, this is the latest one out, but this one, then on the daily we can also use this entry, okay, daily area of demand. I took out this area, and then price is rallying here, and from here we have another one, but price never pulled back to that one. Then we've got another one here, and then this is the daily pre-CP long, and I believe some of us took that one. Okay, so here we could have some targets. I'm waiting for that area. Okay, so this is daily now, daily 4-hour, and on the way up on this daily we would adjust the trend line like that, and let's go to the 4-hour vertical line with a V key, 4-hour, and this is what we have. Okay, now on the 4-hour, once we break this, as you can see, 4-hour area of demand here, another one pre-CP, another area 4-hour there, pull back. Okay, this is a daily as well, and then another area 4-hour and all that. So this is a 4-hour. So we start taking with daily 4-hour, 1 hour as well if we want. We'll take a look at that now. So we hit that area of supply here, over there, and this is taken out. Okay, and this is the trade. We were talking about that one. Okay, some of you took it. So, and here they are. If we wait for confirmation, we can take it, and then we continue to. Now we can switch. Once this area of weekly supply zone here has been taken out, we have now an ascending trend line here. Okay, and a weekly uptrend because this area of supply has been taken out. So if we are trading the weekly, daily, if we were waiting for this area to be taken out to take longs, okay, like I was, then I would switch from here, which was the one I was using, monthly, weekly, daily, to the master sequence, weekly, daily, 4-hour. So once this is taken out on the weekly, okay, this is the trade, okay, and this is another one. So this is how we would use and switch from this area to this area to this sequence to drill it down to a lower time frame sequence, nested sequence. So there is always a sequence within a sequence. So it is up to you to decide which sequence to use, okay, and when to switch to a lower time frame sequence. So once this area, let me clean all this up a little bit. Once this area is taken out on the weekly here, as you can see, this is a weekly area here. Let's place a horizontal line there. This is taken out daily area. And then if you are doing intraday trading, then you can say, okay, I will start using the daily, okay, daily 4 hour, 1 hour sequence. Or you can use also the weekly daily 4 hour. Why? Because the weekly is out of alignment. So you can now, you have an uptrend on the weekly is up, okay? Sorry, weekly up. Trend line on the weekly will be something like that. So you take daily areas of demand with this weekly daily 4 hour sequence until you hit an opposing area of supply. And we have already hit that one already. So, but on the way up here until let me delete this one. Until here, we can start. We've got this area where we can use the daily 4 hour and now 1 hour sequence, or even weekly daily 4 hour. So let me use vertical line, and we place it here once the daily area of demand is under control. So here, this is what we have. We could have now an area here, this area CP, remove this area CP, so this is a new area of demand, okay, because you remove that area. So there we have the first one, okay. Then press rallies from here and create another area, okay, and then we've got another one. It rallies higher, we've got another one, okay. Now this is in control there, and tested, it doesn't work, and then drops, no level to lean on, okay, and then we've got here, over here, another one. But price never pulls back unless you draw it a little bit wider, okay, and then we've got another one here, okay, on the 4 hour, a little bit wider. This is trend line would be sort of no broken yet, but this 4 hour here, the line is or should be an area of demand on the daily. So realignment rules say that if we are trending on the daily up and the 4 hours out of alignment, we can take an area of demand if the area of demand is nested on a daily area of demand. Okay, so that 4 hour area was right there at the proximal line, so that would be available. So you can even switch to the daily, to the 1 hour, sorry. So here in the 1 hour you will see a lot of trades and all that, but it's on the 1 hour it's even trickier because of the number of levels that will happen and all that. But see, here on the daily, it's I wouldn't take on the 1 hour this level. Okay, look at the departure, nothing. Okay, it cannot be seen correctly. You see, if anything, I would say I'm gonna take that one because look at the departure, it was tested and all that, but that 1 hour area was not nested on the daily area of demand, which is here. This one is nested, so it's trickier. Okay, so and this is the way we can use use the nested sequences to drill down our entry time frame and our sequence to take more trades when we have a clear pattern here to the left, price action, nothing here, as you can see. This is bad base as per the rules, so we have room to rally into this area. We take some precautions here to take longs here. We wait for that to happen, broken, and then we can take more longs, and we'll switch to lower time frame sequences like the weekly, daily, and 4 hour, because if you were trading exclusively on the top time frame sequence, weekly, monthly, daily, you would not be allowed to take any short until you get up there, and you wouldn't be allowed to take a short set and forget. Why? Because the monthly area of supply is tested here, so no trades for a long time. Whereas if you know that the monthly area of demand is in control, if you know that the weekly now is up and weekly area supply is taken out, then you can say I'm going to switch now to a weekly, daily, 4-hour sequence. I will drill my sequence down to a lower fractal sequence, which is the weekly, daily, 4-hour, or even to the daily, 4-hour, an hour, or hourly chart if you are trading those kind of imbalances. To me, going as low as the 4-hour is okay. So you can take daily, 4-hour over here, okay, and once this is broken, same thing. Okay, so this is like a block here, another block here where you can have counter trend trades. Okay, and this is more or less what I wanted to put forward with the nested fractal sequences. I have created an example for the euro dollar and a full video explaining bigger time frames and fractal sequences like the 3 months, 6 months, and all that, how they can be combined for set and forget trading and counter trend trading. Hope this video will help you understand much better how supply and demand analysis and the nested fractal sequences work.